Welcome to Earnings Central. In this video, we'll break down Broadcom's fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $14.07 billion. The company actually reported revenue of $14.05 billion, missing expectations slightly by 0.1%. However, this quarterly revenue marked a massive 51.2% increase compared to the $9.29 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was $1.39. The company actually reported an EPS of $1.42, exceeding expectations by 2.2%. This result also reflects a significant 27.9% increase compared to the $1.11 reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Broadcom isn't just performing, they're absolutely crushing it. Their AI revenue has skyrocketed by an incredible 220% year-over-year. That's not just growth, that's a rocket launch. And it's not just AI driving their success. Their overall operating margin hit an impressive 63%, which means for every dollar of revenue, they're keeping 63 cents. In the world of tech, that's like printing money. Their free cash flow is equally stunning, coming in at $5.5 billion. To put that in perspective, that's enough to fund entire startups or acquire promising tech companies. And they're not sitting on this cash. They're strategically using it. Gross margins have expanded to 76.9%, which is a significant jump from previous quarters. This indicates not just revenue growth, but improving operational efficiency. In other words, they're getting smarter about how they make money. And for income investors, here's a sweet treat. They've increased their dividend by 11%. This marks their 14th consecutive annual dividend increase since 2011. Consistency is king in the investment world. Now, let's shift focus to some of the key insights and takeaways from the earnings call. Broadcom is projecting a massive serviceable addressable market, or SAM, of $60 to $90 billion in AI by fiscal year 2027. And this isn't just wishful thinking. This is based on concrete roadmaps from three major hyperscale customers. Their XPUs, or custom AI accelerators, are at the heart of this strategy. They're not just creating chips, they're creating entire AI infrastructure ecosystems. By fiscal 2027, they expect each of their customers to deploy 1 million XPU clusters on a single fabric. That's mind-blowing scale. The VMware acquisition is another strategic masterstroke. They've completed the integration ahead of schedule and have already brought VMware's operating margins to 70%. This is integration done right. Networking is becoming the unsung hero of AI. As AI clusters grow from 100,000 to potentially 1 million units, the complexity of connecting these systems becomes critical. Broadcom is positioning itself as the key connectivity provider, with networking potentially representing 15 to 20% of AI infrastructure costs. They're also being financially prudent. With their massive cash generation, they're focusing on debt reduction. This shows a mature, disciplined approach to capital allocation. Their semiconductor strategy is laser-focused. They're now reporting AI and non-AI semiconductor revenues separately, signaling how seriously they're taking the AI transformation. While non-AI semiconductors are expected to grow at mid-single digits, AI is their rocket fuel. What makes Broadcom unique is their bottom-up approach. They're not looking at massive total addressable markets. Instead, they're deeply collaborating with customers, understanding their exact needs, and building tailored solutions. The most exciting part, they're just getting started. With 2 additional hyperscale customers in advanced development stages for next-generation XPUs, their potential market could expand even further. That wraps up our recap of Broadcom's fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.